Hello, my name is Yutaka Watanabe, tax accountant. Welcome to the channel. Tax Accountant Nabe solves your money problems. Today, I'd like to talk about ensuring due process in a tax audit. We are going to examine a very important rule that is packed into a single short statement. If you ever face a tax audit, think of today's discussion as an extremely practical playbook for protecting yourself. When people hear the words tax audit, many immediately feel a vague sense of anxiety. And honestly, that feeling is understandable. However, I'd like to ask you one important question. Do you truly understand the rights that have been established to protect taxpayers? Whether you have that knowledge or not can make a tremendous difference in the outcome. So, let's get straight to the core of the issue. If you think the phrase ensuring due process in a tax audit is just another rigid bureaucratic rule, think again. In reality, it is a highly practical and proactive tool that allows taxpayers to document the audit process and ensure that tax auditors comply with the law. Today, we will examine this topic through 4 steps. 1. The framework for ensuring due process. 2. Essential actions at the start of an audit. 3. Reporting concerns to the Inspector General's Office. 4. Achieving fair tax administration. We will go through them in chronological order. Section 1. The framework for ensuring due process. The first thing to understand is the balance of power during a tax audit. Tax auditors naturally have an absolute obligation to comply with laws and regulations. However, to ensure that those obligations are being respected, taxpayers should also document the audit process. What does that mean in practice? It means that simply sitting back and watching is not enough. Keeping records serves a clear practical purpose. It sends a message to the auditor. I am paying attention to how this audit is being conducted. The very act of demanding transparency creates pressure that encourages proper procedures. There is no need to make this complicated. Take notes. Record dates and times. Document important conservations and interactions. Even these simple actions can significantly influence how an audit is conducted. Section 2. Essential actions at the start of an audit. So, what should you do when an auditor arrives? There is a very simple but strict checklist. 3 items should be confirmed at the very beginning. Step 1. Confirm the auditor's name. Step 2. Confirm the auditor's affiliation or office. Step 3. Confirm the reason for the audit. The key point is that these questions must be asked at the start, not afterward. This is extremely important. These initial confirmations are not merely a formality, an exchange of business cards, or a polite greeting. They are the first line of defense for ensuring that the audit proceeds properly. In particular, confirming the reason for the audit is often overlooked. Understanding why you have been selected for examination is critically important when determining your response strategy. If you gloss over these points, the entire process that follows may be affected. Even if it feels inconvenient, make sure you verify these 3 items every time. Section 3. Reporting to the Inspector General's office. You may be wondering, what happens if an auditor fails to follow the rules? In such situations, your ultimate shield and official escalation channel is the Inspector General's office. This is not merely a customer service desk. It is a powerful mechanism specifically designed to protect taxpayers from inappropriate conduct. The circumstances under which a report should be made also clearly defined. A report may be appropriate if there is unlawful conduct or improper conduct during the audit. Examples may include arriving without the legally required advance notice, where notice should have been unprovided, using unnecessarily intimidating behavior, requesting documents that are unrelated to the audit. If you encounter such conduct, do not be intimidated. Remember that reporting the matter to the Inspector General's office is an available option. And here is an important point. The mere existence of this reporting system and your knowledge of how to use it has significant value. Why? Because it acts as a deterrent against aggressive audit practice. The fact that an auditor knows your actions are being documented and a formal report may be filed if necessary cannot itself help prevent improper conduct before it occurs. Section 4. Achieving fair tax administration. Everything we have discussed is connected through a very logical chain of cause and effect. You understand the system. You document the audit. You make a report if necessary. That leads directly to step 1, deterring aggressive audit practice. And that, in turn, leads directly to step 2, achieving fair and proper tax administration. The structure makes perfect sense. In other words, taking proactive action is not only about protecting your own business and assets. When taxpayers properly exercise their rights, the administrative system itself becomes more transparent, fair, and accountable. You could even say that every taxpayer's actions contribute to maintaining a heavy tax administration system. At this point, you should have a much clearer picture of how to respond throughout the audit process. Once you understand these principles, you no longer need to face a tax audit with fear alone. Instead, you can confidently exercise your rights. Before we finish today's discussion, I would like to leave you with one final question. Are you fully prepared to ensure that any future tax audit of your business is conducted fairly and properly. Please remember what you learned today when the need arises. Today, I spoke about the topic ensuring due process in a tax audit. For more information regarding tax audits, please also visit the website of Yutaka Watanabe, Tax Accountant Office. I will continue sharing contents related to money and finance. Please subscribe to the channel. Tax Accountant Nabe solves your money problems.